Good evening, everybody. We're having the typical spring weather here in Pittsburgh. It was up in the 60s today, nice and sunny and warm spring weather, and it's not going to snow until the weekend. So all right. Yeah, if you, I don't think it was directly oriented toward scanning. We just did a little bit of scanning, but if you're ever having problems like that, just email Abraham at candlestickforum.com and he'll get that to you. There, Jim put it in. Okay, so we're a little bit, got to be a little bit careful. Notice how we did a doji spinning top harami today with stochastics getting in the overbought area of the Dow. Now in the YouTube or the newsletter today, I kind of illustrated the fact that we kind of titled it, "What is a doji candlestick?" because we always get the basic question of a lot of people that are brand new. They say, well, what's a doji? And so it's pretty obvious, or it's pretty easy to identify. It's where the open and the close is about the same level, showing there's indecision between the bulls and the bears. So not only did we have this occurring up here in the in the Dow, we had a doji right smack dab on the 50. Now, if you were a trader, and if you were buying down here, where do you think the first target would be? The 50-day moving average. And then today with the consolidation at that level, now that consolidation was also attributed to Powell coming out and saying they'll probably have to raise rates to catch up, is just kind of showing that once you get toward the overbought area and you get near resistance level and you start getting some news that might alter the trend, that's where people are going to more than likely start taking some off the table, take some profits. And I think the S&P 500 did the same thing, right about the 200-day moving average. So that means you have to be a little bit careful here. It doesn't mean there might be a full-scale reversal. It might just say there might be some waffling in here for a couple of days, some continued consolidation. So the reason I was trying to point out the doji today is just to kind of illustrate the fact that when you have these strong signals and patterns, and for some reason the most clear one that we've got is Dave, and Dave for some reason does not come up over here on this chart, but it started with an inverted hammer, and today it did kind of a shooting star signal. They had announced earnings. The earnings took the price up pretty strong, but then they popped it back down. Now that's not necessarily meaning that we have a shooting star yet. We'll have to see how it opens tomorrow. Which leads me into our segue of the training this coming weekend. That if you haven't taken the basic training, it's 2 days of butt sore, brain frying information, but it's the big benefit of it is it's all put in chronological order so you can see what the logic is and the rationale of candlestick analysis. And if you don't take any other training course, throughout the year, you want to take this one, because this one we start from A to Z, and it puts everything into an order where you can understand what the psychology is once you recognize the signals and patterns, and what the psychology was that created those signals and patterns. Now you're looking at the market with a whole completely different perspective. And this is, the only reason I'm pushing this is if you haven't taken it, this is the one to take. This is where you get the information where everything else beyond that, meaning these type of sessions, now become reinforcement of what you know versus trying to catch up and learn as we go along. And the way I kind of put it into illustration is when I was 12, my family went to Ecuador to visit friends. And one of our trips that we took in, I think it was a 1961 Rambler station wagon, 2 families of us, we drove down to the coast of Ecuador. And we got to the beach. And as you drove out on the beach, you could see up the beach for miles. And as you looked up the beach for miles, there probably was not more than a dozen people on that whole beach. Now, on this beach, there was a big outcrop of rock, probably about 200 feet high. And they called it Suicide Rock. Now, the implication was that that's where people would jump off into the ocean and commit suicide. But the true reason for calling it Suicide Rock is that if you were up at the top of that outcrop of rock, and you could look up the beach and look on the other side down the shore, you were seeing this dark blue Pacific Ocean water coming up onto pure white sand, or probably the sand was maybe 60, 70 yards, no, 100 yards wide. Then there was about another 100 or 150 yards of dark green vegetation with coconut trees and just dark green vegetation. And then the rock of the mountains went straight up on a dark gray granite color. And it was just absolutely spectacular. So the term Suicide Rock was more that if you knew the view that you had from that rock looking up the beach, and that you didn't come and take advantage of that view, you should commit suicide. That's why they call it Suicide Rock. So I kind of segue that into that if you knew that the information that we're going to be providing for a 2-day training where you completely reform your investment perspectives, well, you kind of get the implication. So anyways, you're going to get a heck of a lot of information, and I can guarantee that it will change your perspective of when you should be buying, getting rid of the emotional stigmas of, man, I can't be buying down here, everything's bad news, or get rid of that question of, should I be buying up here, or can we be buying this one after it's already moved 30, 40% to the upside and it's in the overbought area. What we want to be able to start getting our minds acclimated to is, let's start looking for the buy signals in the oversold area. Let's start looking for the sell signals in the overbought area. So anyway, that was Ecuador. That was in 1960, I want to say about 1963 or 1965. Now, we did drive down the other side of that rock onto the little village that was on the beach. There was probably about a dozen thatched roof huts. As we drove in, our friends were Chinese, and my brother and I were just towhead blondes. And so when we got out of the car, the little school let out all the kids. There was probably about 30 of them. They all came out and stood in line, and we were as much of a tourist attraction for them as they were for us. And then their center of social life was right in the middle of the beach. Was a thatched roof kind of bar, but it was all open, and it had one radio and one light bulb hanging in it, and that was the social activity of the little village. Anyways, if you haven't taken the 2-day training, do yourself a favor. Take it, because you'll get a lot more information than you ever expect from this, and your perception of investing will change completely. And this is coming from the voice of the worst investor in the world. The next training's in Ecuador, that's true. At that little bar, so we got a nice breeze off the ocean. So anyways, all right. Now, what you're going to get is exactly what we can illustrate in chart patterns like this. So I use this as an illustration today. Look at your left-right combo in the oversold area. High probability you're going to be in an uptrend. Look at your J-hook pattern. A little kicker type signal and then a trend kicker today. Anytime you see that trend kicker signal, trying to think of what other ones we had. Anytime you see that trend kicker signal, the implication will be very strong that you're going to have a lot more upside. And there's not too many rules that you have to know about candlestick analysis. You want to know the T-line rule, you want to know the doji rule. And I'll have to make up a rule for whenever you see something gap up above the previous day's open or gap down below the previous day's open, you close out the trade immediately if you're in the opposite direction. So you can see what's happening on this one. There was our trend kicker signal. Went right to our first logical target. And then today it did a doji. So this makes the trading platform very clear. The doji rule. If they open this lower tomorrow, you take profits. They need to open positive and trade positive to continue to stay long. And here is one that everybody was kind of asking about today, of what do you do on this trade. Now, unfortunately, whoops. So you can see it was starting to move a little bit away, but it was still on a fry pan bottom. If you were going to take some profits today, what would have been the best way to do it? So here's all the different strategies we have. As soon as it started coming down through the T-line, you might have taken some off the table. You could have always bought back down here because it looked like the selling had stopped. Now, right now, I think it's trading back up in this area. So it's trading positive, which means this candle actually is much more closer to a doji day, but that still gives us a strategy. Either we're in a fry pan bottom looking for a strong move to the upside, or if they open this lower tomorrow, they've come up through the resistance level. Now they're probably coming back to test the 50 to see if it's going to act as support. So at least you now have a game plan based upon knowing what should happen on each signal, and have a little bit more clarity, I guess is the right word, to know what to do based upon what should happen after a signal. If you were in a long call, would you roll to an at-the-money position and perhaps sell a short call against it? Now I wouldn't get that sophisticated, Frank. I'm still in the bullish spreads, the 4, and we sold the 5 for, I think one batch was 10 cents, the other batch was 15 cents, with the idea that there's not a whole lot of money involved. And if this pattern works as a fry pan bottom and does what we know a fry pan bottom should do, and want to stay long until we see a confirmed sell signal. So that doesn't necessarily mean it's going to go straight up. It might pull back and do a J hook. If that's the case, you use the 10-minute chart to maybe come out and then reload if it came back and supported off the T-line. T-line and the 50. So this is the type of thing we look for coming out of fry pan bottoms. So this might have the same conclusion. If they sold it off, this might be the J-hook pattern setting up, coming back to test the T-line and the 50. So the other stocks, U.S. Steel. We picked some of this up near the J-hook pattern, but you can see what's happening. They have never been able to close this one back below the T-line. We recommended this one because of a very strong probability factor. We know a Morningstar signal is one of your 12 major signals. We know that the Japanese rice traders have illustrated this, that if it confirms, you're probably in an uptrend. Followed by a doji sandwich. We know what the results of a doji sandwich is. Usually more upside. So you add those two together with your McMuffin, Morningstar signal, probability upside. Doji sandwich, probability upside. That's a double confirmation that this is probably a very strong bullish trade. So it traded up after hours. It's trading up here. I'd still be a buyer of this with the expectation that we're probably heading up toward the 50-day moving average. Z-Lab didn't execute today, but I saw it was trading up after hours. When these start gapping up and then supporting at the 50 or at the T-line, pretty logical conclusion where your next target is going to be. So here's one that has a perfect illustration of a bobble breakout. You can see how it failed right here at the 50, pulled back, couldn't get down through the T-line, and came back up through the 50. Now, what does that mean to us? For us, we can see that's a bobble breakout, J-hook pattern. Well, why is that going to confirm nicely? Because everybody else is watching to see what it's going to do with the 50, and when they see the 50 is not acting as resistance anymore, they start buying. We're just happen to be in a little bit earlier than everybody else, knowing that we have a high probability trade setup. MATX. This is where the T-line becomes a very effective trend indicator. When you can see the J-hook pattern and then the gap up through this level, told us wave 3 was in progress. So these are the positions that even though the market had pulled back there for a while, look what happened ever since the kicker signal in HZNP. They've never been able to close this below the T-line. Now, why is that important to us? Because if we can recognize a strong signal and we can use our confirming indicator, the T-line, that keeps you from letting your emotions say, oh man, I'm got a good profit, maybe I should take profits. This is the type of thing that keeps our emotions out of our trading. Whoops, I forgot to put the link in. There's the link for the members sign up for the 2-day weekend. The bad news is when we project we're going to go from 10 o'clock, take a 20-minute break for lunch, we'll finish up around 3 or 3:30, 4 o'clock. That's not going to happen. Figure on 4 to 5 if we can get done at 5. because through the years I keep adding more information showing what logical processes occur in human nature in using our indicators. Number one, we can see they never close this below the T-line. Number two, we can see the T-line crunch. It's a high probability trade that if they can't close it below the T-line, they'll take it right up through a resistance level. So these are all little insights that you're going to gain from knowing what the signals are telling us, and then how to take advantage of the information that we've also can apply to the chart, like our T-line, trend lines, anything else that everybody else is watching. Band, kind of a little scoop type fry pan bottom starting back to the upside. Now, the other element that we want to look at when we look at a chart is not only the signal or pattern, but if it works, what's the magnitude of our return? Well, if this goes from the $30 level back up filling this gap at the $48 level, that's a good 60% upside potential. There's going to be a lot of charts that look good, but their upside potential may only be 7%. We're looking for the ones that doesn't have any resistance or have targets that are going to produce as much profitability based upon that pattern working to take advantage of that information that's built into that signal. There's another bobble break. All you can do here is stay long as this stays above the T-line with the expectation they could be heading for the 200-day moving average. Let's see. And CPS. This is your cradle type pattern. And even if it's not a pure cradle pattern, look at all the aspects that we can take advantage of by knowing how investor sentiment works. Where do most people sell? They panic sell at the bottom. How do we know they panic sell? They gap down. Then what happens? They go flat. And then when they take it back up, that's our cradle pattern. Now, after hours, this one actually closed back up in this range. So we want to be still buying this, especially if it comes up through this level, telling us we still got a lot of upside based upon that high probability pattern setup. Now, if I found another one. Oops, I got it here somewhere. Oops, I got it here somewhere. Oh, there it is. Look what's happened here. Look at your series of dojis. And then when they break it out, remember what a series of dojis illustrates. A lot of indecision. Then that tells you that after all that indecision is building up, usually you're going to get a very strong price move on the breakout of that indecision. Oh, I can't pull it up here. ROIV is one that had a series of dojis. And then look at this series of dojis. Then they take it up. What's that telling us? We've got a stepstone type trade, meaning we're probably now into the next wave to the upside. Okay, the biggies. Tesla. Whoops. Stayed up above the 50 today. You stay long, use the 50 as your stop. Apple. Hit the 50. but your stochastics is still heading up. Probably want to keep an eye on this one if you're trading Apple. Look at your inverted hammer, gap down doji, bullish confirmation, gap up. That's a pretty good indication that this level right here was acting as a support level, and they came back up through the 200. So this type of visual identification, this gives you a great advantage of, if you're aggressive, you start buying as soon as you see that positive trading after an inverted hammer, especially at a level where you can see everybody else is watching, the 50-day move or the 200-day moving average in this case. NVIDIA, you just stay long on this one. Whoops, didn't want to do that. And Netflix. Not anything wildly exciting, but you can see they broke this downtrend after gapping up through that level. What am I missing? Amazon, that's right. So you see that gap up. That starts giving you information saying they're coming back in with great enthusiasm. May not have bought on this day, definitely would have not bought on this day, but that J-hook pattern after this gap up told them we could be buying on this day with the idea they're probably going to go to the 50. Well, they went through the 50. Now there's a pretty good indication they could go to the 200. However, what's our warning today? The doji. So if you had gone long, or if you were long this position, your safety stop would be right here, because logic says getting up in the overbought area, you see a doji. If they come back down through the previous day's doji low, it tells you they aren't going up any further. They've hit a resistance. They're probably pulling it back. Okay. The things that we want to look for the most are setups for bobble breakouts. We can see CYRN. I think who was doing this one today? Was that Saki? Somebody was pointing this one out. I'm also watching Fuel Cell to see if it's going to come back up through this level, giving you a bobble breakout, which would continue this uptrending channel. So anytime you see that bobble breakout, it's telling us that the investor sentiment is building up, and the was that you, Chris? Okay. We're buying it because we can see the buildup of investor sentiment creating a J-hook type pattern. The bobble breakout is going to be instigated by the fact that everybody else that's watching it to see what it's going to do with the 200 or a resistance level start piling in. So there's your J-hook, almost, yeah, kind of a J-hook bobble breakout. Not only did it break out through the 200, but it supported the 50. So these are extremely high probability trades. So even if you're a day trader or an option trader, these are things that you can go after with great confidence. I started buying calls right here. As soon as we saw it start coming up through the 50 on a bobble breakout, this was an extremely good risk-reward trade setup. One, if it's working, it's going to be a big move. If it doesn't work and closes back here, you close out with a very small loss. RVNC. A J-hook pattern after your bearish or your bullish belt hold. I mean, observe the obvious. Darn, I keep doing this and I don't need to do that. Fry pan bottom, bullish candle, J-hook pattern, breaking out through the beginning of the fry pan bottom, where do you think your first target is likely to be? Up here. When you start seeing these type of formations, telling you the bulls are definitely taking control, that was pretty much the reason this one we were starting to buy pretty heavily. The alert, the pullback, bullish engulfing, double doji setup, gap up. Darn, I keep doing this. And right now it's trading back up in this range. If this opens positive tomorrow, breaking out through here, there's still a lot more upside on this one. Now, obviously, this one is a story stock. It's the solid lithium battery play. And this is kind of observe the obvious. You're in an uptrend. They pull back to the 50. And then you start seeing buy signals. I can't tell. Is that a... There's your left-right combo. Right smack dab off the 50. Now they're trading back up through the T-line. We look at it as a J-hook pattern. Well, what's the normal investor sentiment? Yep, they came up through the 50. They're supporting at the 50. Now they're buying, or they're supporting. Let's start buying because they're supporting at the 50, and that's what causes wave 3. Would you consider the 310 candle a belt hold? It doesn't matter what you want to call it. You could call it a belt hold. You could call it a bullish engulfing. But the fact that they opened it way down here and brought it back up above the T-line, what is the mechanics of that? What do we know happened there? There were sellers. Up here there were buyers, sellers, buyers, sellers, buyers, sellers, sellers. Bam. And the bulls sopped all that selling up, took all those sellers out of the way, less sellers. That gives you a lot more conviction, or a lot less sellers in the way when the buyers continue to buy. That's pretty much what it is. The uptrend, there was some weakness, but that weakness was bought up. This type of signal is just confirmation the bulls are definitely still in control. CCJ, another J-hook pattern. What else can we identify? An uptrending channel. Today a doji sandwich. What's the implication? We're still probably in a good steady uptrend. So the more we can recognize a pattern, whoops, I think there's more to this chart, but you can see you got kind of a fry pan bottom set up, J-hook pattern set up. So CISO is good, and that pattern is, when you see it, here's the risk reward. What do we want to see coming out of a fry pan bottom? A strong price move. It could either be a gap up, a kicker signal, a best friend gap up, because what's that telling you? That the investor sentiment building up finally reaches enthusiasm. Lie, hold on to your individual ones until I tell Jim to do the double line. So this is what we expect coming out of a fry pan bottom, this type of price move. So when we see something like this setting up, at least you're putting yourself in a situation where the probabilities are, if it doesn't work, you're out with a small loss. If it works, you've got a big upside potential. All right, I'll take a look at this one real quick. No, you're not anywhere near the overbought condition yet in OVV. I don't know what the volume is on this. I'm sure it's pretty good. But when they start gapping up, and I would just consider this 2 gap ups. That's telling you there's a lot of force to the upside. Okay. All right, what type of pattern is this right here? Just ask questions to see if anybody's awake out there. J-hook, doji sandwich, J-hook, J-hook, all right. And how is it starting? There, Gary finally got it. There's your McMuffin. You can see the J-hook pattern setting up, and how is it being constructed? By a Morningstar signal followed by a doji sandwich. What's this imply? There's more upside. If there's more upside, what do we got? We got the J-hook pattern working. So this is where we put 2 plus 2 together. The more pieces of evidence that we can put into our visual analysis that tells us the probabilities are greatly in our favor, we can see the pattern setting up and how it's setting up because of the signals. There's our McMuffin. J-hook pattern off the 50. Kind of broke through this level. That just implies there's more upside. So this is what we'd like to get everybody acclimated to. You start seeing this, you should automatically think this is a double whammy profit trade that we're looking for more upside. All right, some of the food stocks, again, go into a specific sector. There's your J-hook pattern on IPI. Was that yours, Gary? You can see the J-hook pattern. Moss. You can see the J-hook pattern gap up through the resistance level. That's very informative. And CF. Look at all these last couple have broken through kind of this, well. Kind of that resistance level. What can we expect? J-hook pattern, wave 1, and they've just gapped out into wave 3. So here is what we kind of advocate. And it happens every training session, whether we're doing the top rank signals and patterns, anything. That a lot of people come back and say, man, there's so many good chart patterns. How do I learn all of them? And I always tell people, learn 3 or 4 very well. Your bobble breakouts, your fry pan bottom breakouts, your kicker signal, your best friend, your left-right combo. If you learn how to identify them, where they're occurring, what's improving the probabilities of them performing based upon maybe a support level or a breakout level. But I can pretty much guarantee that if you learn 3 or 4, even though that's limited in number, you'll still have more trades than you'll be able to handle. The advantage, though, will be that you're not at the mercy of wondering what's happening. You will now know what should happen based upon those signals. So I had to backtrack a few years ago where I said, wait a minute, I'm kind of mishmashing here. I'm looking for one pattern, and here's another pattern. I just started to concentrate on a few, became good at those, and then when I became good at those, I started learning the next 2, and then the next 2. And that doesn't mean you disregard the other ones. You just want to concentrate on the ones that are providing what you figure is the best or the most identifiable for you to take advantage of. So here is a trend kicker signal. Notice how this one opened here and closed here. Then they gapped it up above the previous day's open and took it positive. I would guess they're going to go right through the 50 and coming back up to this level, a good 20% upside. There's your little trend kicker type signal. Notice they opened here, closed here. How did that thing get on here? There we go. If this is a trend kicker, and we know the kicker is a strong signal, what's our next pattern? Well, we can see the J-hook pattern setting up. Steel stocks worked. Another sector, U.S. Steel, Steel Dynamics. I don't think Schnitzer did as well. That little kicker type signal, and then not a true steel company, but look at Alcoa. It's also moving up. And Century Aluminum. Look at your doji sandwich gap up. Wave 1, wave 2, going into wave 3. Rob, you don't really need a scan for that. I don't know whether we got one or not. But if you have a scan for the Morningstar signal, or if you have a scan for the doji sandwich, more than likely you're going to come across that pattern, either one of those scans. Or the way I come across them is which stocks have had the biggest percent move today. That may have been because of the Morningstar signal. That may have been because of the doji sandwich. I'm not sure if anybody's ever written a scan for the McMuffin itself. But you don't necessarily, okay, Jim, you don't necessarily have to scan for it. First of all, they don't happen very often. I mean, they're, you might see one every 3 days or once a week, might see one. But they're always good to identify when you do see them because you know what the results should be. They're going to be a double confirmation that the bulls have taken control. Oh, whose handwriting is this? W. Well, MKTW. Just didn't work. We're also going to be doing gaps, because gaps with candlestick signals have a very powerful implication. When you see, can't tell, is that a kicker signal? That's just a left-right combo gap up. Now, what we don't want to see is an indecisive trading day. But we can see what the result was of VG or VYGR based upon that gap up breakout. That puts you in these 45 degrees. So once, if let's say that's one that you want to concentrate on, learn what happens, knowing that you probably have a 45 degree in a lot of cases, you might not buy the calls, but you might be doing some spreads. If you're trading options. The lithium companies, SLI, showed some good strength today, and LAC broke this downtrend after bouncing off the 200 at this support level. That one's probably got more upside. I didn't check LTH. Nothing major there on that one just yet. How many days minimum do we need? it's not a day calculation, Will. It's just the visual aspects of it. And the J-hook is further enhanced if it was supporting off a major moving average or was supporting off the T-line. Oh, is that right? Okay. So where is it trading now, Gary? Lay, again, wait for your individual ones until after Jim does the double line. The oil stocks did well today. There's your J-hook pattern bouncing off the 50 on BPT. BTU, J-hook pattern, doji sandwich gap up. AMRK, doji sandwich gap up breakout. Okay, so it didn't really sell off, so it's still trading up in this range. All right, that's not terrible. Marathon oil, J-hook pattern. Look at the gap ups. That usually implies a lot of strength to follow. And CLR, same thing. CRK, here's your trend kicker signal. Now I went with Occidental today because I could see the trend kicker, I could see the breakout, and it's probably got some positive influence that Warren Buffett was adding a bigger stake to that position for their funds. Oops, not found. Why is this? Okay, PBF. Another J-hook pattern. On that one, we did see an X. CLBT, setting up nicely. Fling, another one that's probably heading to the top of the channel. There's your morning star signal, smack dab off the 50, kind of your support level, just a high probability trade. Oh yeah, me and Warren, yeah, we chat all the time, Bill. Oh, that was, yes. So the morning star signal is just a high probability reversal, especially when you can add the fact that it came out of the oversold area right here at the 50. More than likely, you're going to have a strong upside. Then we did the series of dojis. And something like this, where you have a wave 1, wave 2, they broke down. If you're looking for a short position, HLI probably has a wave 3 in progress. And beam, evening star signal, failure right here at the 50. Oh, I hate when I do that. Implying there could be more downside on this one. Taught him all about candlesticks, I'm sure. I did, yep. Okay, so what we have to be watching for tomorrow is how they open this market. And as you can see, after hours, the after our futures are trading a little bit lower. I wouldn't be surprised if they come back down and before the end of the night test the 50 and see if they hold up at that point. Okay, that's about all I've got for tonight. Still lots of good charts out there, especially over in the oil patch area. Apache, Doji sandwich gap up, Doji gap up. At least your first target's up here, putting it in the right direction. And, whoops. ExxonMobil, another one that's heading in the right direction. Might not be a wildly exciting stock, but right now you could probably be buying this one, knowing it's heading in the right direction, and putting on some option strategies. Okay, so are there any general questions on candlesticks? Definition says a Morningstar is a 3-day pattern, but it's okay to have a 4-day pattern also with 2 indecisive candles before a bull candle closes at least halfway up. Yes. So you consider a Morningstar signal. Well, when did we do? For the day of indecision, or with 2 days of indecision, as we see over here on Roku. If it goes to 3 candles, now I put it in the classification of a cradle pattern. Roku, I wouldn't pay attention to until it comes back up through this level, which is not unusual to come up, consolidate, and then see it head back higher again. Same thing over here on Roblox. Kind of your Morningstar signal. Wouldn't pay attention until it comes back up through that high. What meaning if 2 dojis appear together? Nothing. Just 2 dojis appearing together. Some call it a 3-river or 4-river Morningstar. Bill, I put it again in the classification that if there's 3 or more, I now consider it a cradle pattern. But it still doesn't matter what you call it. The fact that if you can see dojis in the oversold area, it doesn't matter whether it's 1, 2, 3, 4, 5, 10. The more dojis you can see down here, the more you start watching for a change of investor sentiment. At what percent up do you cut by half? I don't know what that means. RK, have you not been listening to kind of hold on to your individual ones until Jim does the double line? How would you interpret stick sandwich in uptrend? How would you interpret stick sandwich in uptrend? That it's confirming the uptrend. And when do you start taking profits? When you see a sell signal. Very simple logic. If you're buying based upon a candlestick buy signal, you're selling based upon a candlestick sell signal. Now your confirmation is, you might, if it's been riding the T line, You sell when you see a candlestick sell signal and a close below the T-line. Or if you're moving too far away from the T-line and you see a sell signal, you take profits even though it hasn't confirmed yet with the expectation it's coming back down to test the T-line. Not a flutter star. Bill, you got me there. I don't know what. Any indicators of multiple dojis about to move out of a fry pan bottom versus a dead stock? You just wait for it to break out. You're not trying to anticipate it. If I saw this, I'd say, yeah, I'm going to wait till I see which way they're going to take it, down or up. When I saw that day, that told me exactly what this was telling me. They're taking it to the upside. Stick sandwich would mean temporary. Now, usually a stick sandwich is just a one-day pullback. I can't remember a stick sandwich right now, but a stick sandwich is you're in an uptrend, you have a big up day, then you have a big down day, and the next day it's a big up day. So that down day is sandwiched in between the two up days. So that's why on something like Roku, if tomorrow it opens and comes right back up again, there's kind of your stick sandwich. That means there's going to be more upside. Okay. I guess with that, Jim, go ahead and do the double line. And in 3.2 seconds, do the next double line. That's kind of your breakout. Stay long on this one. If I was going long tomorrow, I'd put a safety stop at today's open. Big, same scenario. Breakout, now you use your doji rule. If it opens positive, you can be buying. QuantEscape, more for a longer term hold. If this opens positive tomorrow, you can start buying, adding to a long position. And PLTR, if you're long, if it opens lower tomorrow, I'd close it out and wouldn't buy it until it comes back up through the 50. That's what happened here. Kava, you can see the fry pan bottom setting up. Whoops, even more. There's your series of dojis. I'd be a buyer on positive trading on this one. NRSN, there's nothing you can do here other than if you were watching this and you saw it gap up. The rhetorical question, is it, am I chasing buying here? Am I chasing buying here? Am I chasing buying here? That's where you go to your 10-minute chart. Say, no, you can be buying here, you could be buying here, you could be buying here. Might not be buying here, but it would be buying here, wouldn't be buying here. Now, this late in the day, what was that telling you about your upside? And they were taking some profits up here. If you happen to have stayed long, it better open positive tomorrow. If it opens lower, you close it out and you don't buy it until it comes back up through today's close. Just the probabilities that if they open it lower, they're not taking it up until they come up through that level. Rio, you can stay long on this one. And Vail. Stay long on this one. I guess this one's overseas. That's why it's so choppy. Another J-hook pattern potential setting up. You could buy on strength, use the T-line as your stop. QTT, there's your best friend gap up. You stay long until you see a sell signal. Rig, you can buy this one on positive trading after today's gap up. That's a good looking chart, kind of your cup and handle. And there's your doji sandwich, bounce off the 50, just make sure your volume's good. Rite Aid, nothing great yet. If you had gone long, it has to open positive and trade positive to stay in it. If it opens lower, sideways chart. FTCI, you just stay long on this. Look at your bullish engulfing J-hook off the 50. Use today's low as your stop. It shouldn't come back through that level. Valero, you could go long on this one, breaking out tomorrow. Allstate, stay long after it broke out. I'd have a safety stop at today's low, kind of a hanging man. It still needs to trade positive from here, so it doesn't give you a hanging man confirmation selling. BNE. Yeah, make sure your volume is good. That almost looks like it's a low volume stock. If you're long, stay long as it stays above the T-line. The Qs, short Qs, you stay short until you see a reversal. You could be just as well trading the long side. ENPH, another one where you can stay long after your bullish Harami, J-hook, bobble breakout. It definitely needs to open positive and trade positive, showing that you're breaking out through this level. NLOC, that's a Morningstar signal bouncing up, but not a very exciting chart. Obviously, it didn't confirm today. And I should rephrase that. That wasn't a Morningstar signal. That was just a bounce up off a 200. It has to get through the moving averages to kind of negate that the strength of the bearish kicker signal. Is that a potential McMuffin? No, because you're not yet doing a Morningstar signal. A Morningstar signal needed to close above the halfway point of that candle. That's not a very good looking chart. Facebook, you can stay long as it stays above the T-line. Unity, another one has to open positive. If it opens lower, it's coming back to test the T-line and also telling you they haven't broken out through this level. It definitely needs to open positive and trade positive. Stone, you can buy this one on positive trading. Your best friend breakout. Look for a 45 degree. Space, another one that definitely needs to open positive to break this little downtrend. It looked like it used the, it did use the 50 as support, so you don't want to see it trade back below the 50. That would tell you they failed. You could buy this one on strength. Still not wildly exciting, but it's got the prospects of coming back up into this range. And GLOP, trend kicker type signal, J-hook pattern, probably means there's still more upside. Advanced micro, if you like it, stay long. It needs to get through the 50. Use the T-line as your stop. So JB, Matador, you could be buying this one. Unisys, if you're long, you can stay long as long as it stays above the T-line. And AUPH, and this one has to open positive tomorrow to tell you they got through this kind of resistance level. CYRX. There's your Morningstar signal with your best on this side. That's a Morningstar signal with an added confirmation that the bulls are definitely in control. You stay long on this as long as it stays above the T-line. You could buy this one on positive trading tomorrow, Philippe. Yes, so you're going to use the doji rule. It needs to open positive and trade positive. Twitter needs to open positive to get out of this range. If it opens lower, I'd close it out and wouldn't pay attention until it breaks out to this level. Pfizer, Doji, I would have a safety stop probably right here. If they came in this direction, they're coming back to test the T-line. Zoom, stay long. Almost an inverted hammer. I would just stay long on this as long as it stays above the T-line. AUID. That's a good little breakout. If you like this one, you can be buying it. Just watch to see what happens once it gets to the 50. MasterCard. Slow uptrend. All you can do is stay long as long as it stays above the T-line. PayPal, same scenario. You got the fry pan bottom trajectory. Use the T-line as your stop. PLTR needs to get up through the 50. If it opens lower tomorrow, close it out and wait for it to come back up through the 50. Suncor, you can be buying this one. Good gap up. Intel, not very exciting as far as a trader. But you do have a Morningstar type signal, your bullish Harami gap up. It needs to break through this level. But just be aware that because it's such an institutional trader, your percent return isn't going to be huge on this one. Square, stay long. Use today's low as your stop. We did be big. ERX, you could buy this one, J-hook pattern. Vivo, I probably wouldn't short it yet. It's just more sideways. I'd want to see definite confirmation on the short side. Apple touched the 50. It definitely needs to open positive tomorrow to stay in it. Use today's open as your stop. Yeah, and they did bring the Dow futures back down to where it hit the 50. So we've got to see where they open this one up tomorrow. PLNHF. Doesn't come up over here. We did Kava. Kava you can buy above or on positive trading after that series of dojis. And FAS, stay long, use today's low as your stop. If they come down through there, they've told you they failed at the 200. Costco. Bearish Harami in the overbought area. Use today's low as your stop. If they come through there, they're coming back at least to test the T-line. Do you use pre-market scans to identify stocks? You can. And as soon as they open, if you can see they're going to open positive. So that's one technique that you can use is see which ones are opening. Oops. Yeah, so if you saw they were gapping this up because of the pre-market movement, as soon as it opens, then you flip to your 10-minute chart and say, all right, are they buying as soon as they open, or are they opening it and taking it right back down? When another bullish Harami, same scenario. Use today's low as your stop. Myra, same scenario. It has to open positive. Unisys has to open positive. If it opens lower, it's in a slow upward trend channel. You can stay long as it stays above the T-line. Yes, you'll get the YM. You get the passcode. Abe sends them out on Friday night. Morningstar signal. Stay long. You could even be a buyer on strength on this one, telling you wave 3 of your JHOOK pattern is working. Nothing here. That's kind of a nothing chart right now. And BG, Morningstar signal, best friend startup. At least figure they're bringing it back up to the top of the channel. Nikola, you can stay long on this one. Same scenario though, use today's low as your stop. Anytime you see a doji up in the overbought area, put your safety stop in. Solo, doji sandwich, breakout, bobble breakout, stay long. I found one the other day. Is this it? No. SONX. Yeah, that was the inverted hammer one. All right. NVIDIA, use today's low as your stop. I don't know whether Berkshire, ever since your belt hold type signal, you can stay long as this stays above the T-line. Okay. All right, it's going to be important to see how they open this market tomorrow. If they open things lower, you want to start taking profits on longs. That means if you look at the total trend, come up to the 50, they failed. Come up to the 50 and they fail. That means they're still in a downtrend. Okay. Guess with that, everybody have a good evening. We will see you bright and early tomorrow morning. We'll see you then.